I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is relatively the same. I got out of Google today. I'm not in Paramount anymore. I'm not in NXT anymore. NXT was a really good trade. Cool. All right, we got the disclosure done. Sorry for the couple-minute delay. Holding some Palantir into the earnings report, so I was managing that when it hit. Palantir report. The reaction seems better to me than the report, and I haven't really had much time to look at it, so I don't know if anybody else has any feedback. Inline EPS, slight beat on revenue, but they guided Q1 revenue down, which is what concerned me a little bit, maybe what created the delayed reaction there. You're definitely not bad numbers, but a growth company that misses on revenue guidance always makes me nervous. So I'm gonna have to do a little more research on that. But so far so good. I'm long, so not going to kiss a gift horse in the mouth, as they say. I don't know what that expression actually means. I don't know what that means at all, actually. I don't know why you would kiss a horse on the mouth. Seems a little bit strange, but my name's up after hours here, and it's helping my P&L, so I'm not going to complain, I guess is what I'm saying. All right, let's try to do a morning meeting here. The SPYs are down 0.4%, the Qs are down 0.1%, and the IWM is only down 1.25%. It was down over 2% at one point today, but still 1.25% down is a pretty big move for any of our indices. Let's take a look at the price action. So the SPYs and the Qs are actually an inside day. They're actually a bullish rest day. So you can see it here with our daily candle. Of course, right as I said, I got a false print. But yeah, daily candle here for the SPYs. It's an inside day. It's a rest day. It digests that Thursday, Friday move. There's nothing bearish about this. The daily chart is in an uptrend. It's super strong. An inside day is a bullish rest period within the confines of an uptrend. So tomorrow, the technical trade would be to look for the inside nut for trend continuation. Qs, exact same thing. Bullish rest day, still sitting in front of 430. 430 is some big resistance for the Qs, but just an inside day, and the internals of that inside day, not that they matter too much because we don't want to overread range candles, but the internals of the inside day have a nice little downside wick there. We closed near highs. So the Qs are also looking great. They're digesting that Thursday, Friday move. 430 is a big resistance level. The problem, and we discussed this in detail this morning, is the IWM. And did we close? Oh, I thought we actually closed above 192. I'm just seeing that we closed 6 cents below 192, which is a little bit of a problem. The IWM is a concern. You know, the average stock so far in the year of 2024 is negative. I remember at one point on Friday we were discussing, Rock brought it up in the chat, I didn't even actually realize this, but at one point on Friday we realized that the IWM at that point was down about 4% on the year, while the Qs were up about 4% on the year. That's a pretty big divergence. It goes to show you the market underneath the surface really has not been healthy, and it's just, what else is new? It's continuation of Meta and Amazon and Nvidia that are just continuing to push the Qs higher, making the SPYs look healthy when your average stock that's out there is not looking so great. And it's been one of the things that has had me feel a little bit more bearish with my thought process towards the market. Feeling bearish, but obviously still have 14 long swings on. But I've been very, very heavy short the TQQQ as a means to hedge myself a little bit. Obviously not the best hedge in the world when the Qs are what's up 4% on the year and the IWM is what's down 4% on the year. But the IWM here was giving me some real concern this morning when we were set to gap down and open up near yesterday's low, because you've got Wednesday's Fed Day candle, which is a negative Maribozu that closed on lows. Grant, it was the same for the SPYs, the same for the Qs, but the SPYs and Qs by the end of the day, Thursday, the very next day, had fully negated it. And that was even before we got hit with Meta and Amazon earnings that ripped us up even further on Friday. So while the Qs and SPYs were able to fully recover and negate that negative Maribozu, the IWM lost its key 196 support level with the Fed announcement and has never been able to regain it. We basically spent 2 days digesting below 196 on Thursday and Friday, Friday being an inside day, and then this morning we were set for the inside and down. 192 is also a big level for the IWM. It looks a little bit sloppy because we broke it and came back up over the course of 4 days in mid-January, but you can see that 192 was important support for the IWM prior to that little breakdown, and then was important after again, and was important these last 2 trading sessions. So what we discussed in the morning meeting today was let's pay close attention to this IWM gap down. Obviously, the IWM is gapping down more than the SPYs and the Qs because the TLT is down so big. Interest rates are up really big this morning, and the IWM is the most interest rate sensitive index that's out there. Your mid caps, your small caps, your average company that exists is going to be more interest rate sensitive than Apple or Microsoft is. So if the IWM digests around 192 for the first half hour of the day, and then the 80 MA on the 5-minute catches up, and that pushes the index lower, and we really start losing 192, it could be a problem. And guess what? That's exactly what happened. It was a problem. So we went sideways for 20-25 minutes this morning. That 20-25 minutes of more or less sideways price action in the beginning of the day was enough to allow the 80 MA to basically catch up to the base of our bear flag. And then once that happens, bam, you get your next leg lower here, which coincided with the ISM services number that came out, which came out hot. So guess what? Even further weighing on the TLT, further weighing on these interest rate sensitive stocks in the IWM, and we broke down further. So the Russell was not looking good. Was definitely not looking good. SPYs and Qs were heavy this morning as well, but they were inside days. And inside days within a range like that is most certainly not the end of the world. But IWM was a problem. And then at the low of the day, to give credit where credit's due, we called out long for the market, particularly for the IWM, literally off the 10:20 a.m. candle. But that was the low in the SPYs and the Qs also, or no? No, it was not. That's right. I remember the Qs. I remember being encouraged post 10:20 when we called out that IWM low, that the IWM was actually bouncing and holding in better when the Qs were further weakening out. So the Qs and SPYs, they didn't make their low of the day until 10:40, but the IWM, it made its low at 10:20. And again, that's exactly where we called out the long. Now, the long trade there at 10:20, I want everyone to recognize what type of trade this is. This is a counter trend trade. Okay, this is a counter trend trade. If you were buying the SPYs and the Qs anywhere near these pivot lows, that's counter trend on your 5-minute chart, but it's with trend on the daily chart. And that tends to be a pretty good trade when you have a weak early trading session within the confines of a very bullish market, and you come in and you take counter trend trades on that small time frame. They're actually with the trend on the big time frame. That's usually a really good trade because that's how you find like pivot lows on the daily chart that can actually give you really good risk reward setups. The IWM here, this is a very, very much a pure counter trend trade pretty much across the board. We called out a long in the weakest index that was out there when it's trading below multiple levels of support, not just below 196, but also now below 192, approaching 190 at that point. So what was this trade? Why was it a good trade? Or was it even a good trade, right? Sometimes we can make money in trades that aren't good trades, and that can actually be a very bad thing because it can reinforce bad trading habits. If you make money by doing the wrong thing, it reinforces bad trading habits, and that's not what you want. So let's recognize this trade for what it was. This is very simply a time frame sort of trade. What do I mean by that? Extension in time frame. It's 10:20 in the morning. We're extended on the 5-minute chart, let alone how extended we are on the 15-minute chart. The 15-minute chart has a boatload of extension at this point in time. And we know, and this is just our time frame rules, that post 10 a.m., it's very difficult to maintain extension on a 5-minute chart. Post like 10:30 a.m., it's very difficult to maintain extension on a 15-minute chart. This is just how markets work. Markets work in periods of consolidation and correction and expansion and continuation, basically over time. So at this time of the day, seeing this doji coming in at 10:20, seeing the extension on the 5-minute chart for 10:20, that's a lot of extension, right? We're trading at 190.06 with the ADMA at 191. So you have about $1 of extension in the 5-minute chart. The 15 at that time, the ADMA on the 15 is very similar to the 21 EMA on the 5. So you basically have $2.50 or so of extension on the 15-minute chart. So it's just a little counter trend trade. Hey, I'm going to come in, I'm going to take a low risk shot here in the IWM. It is counter trend. Most likely this trade is going to fail. That's what we want to recognize. Most likely this trade is going to fail. But sometimes we like to take counter trend trades, even if they're more difficult trades, even if they are having a high potential of failure, just because we can make a few bucks for ourselves off of an extension bounce or something like that. So that was pretty much the reason for the call out, figuring if I'm able to get even just a bounce to the ADMA on the 5, and really I should be able to get more than that given the time of the day, that should be more than enough for me to get my risk covered. So I came in and I bought TNA as a proxy for the IWM. I think my average price on my buy was $32.78. So basically I had 13 cents worth of risk off that low. And again, if I can get a snapback even just to the ADMA there, I've got 25 to 35 cents of potential reward just to that snapback. And that's kind of what happened. We got to bounce back to 33.04. We got to bounce back to, if we go back to the IWM, just the ADMA here on the 5. For me, that was more than enough to get my risk covered. And now it's like, okay, my risk is covered. Who cares what happens next? And that's genuinely how I feel about it. My risk is covered. Who cares what happens next? If it rolls over, makes a new low, and stops me out, I'll take that trade all day. That means that I have a failed trade where I lose no money in. I love when I have a trade that fails and I lose nothing in it. That, to me, that's a huge win. And that goes to the only way that you can have a trade that fails where you lose nothing in it is because you executed well and you game planned well. So that was it. And then it's like, okay, maybe this time of the day, I should be able to get some sort of 15-minute correction. So that's going to be my next kind of more major target, is basically the 21 EMA on the 5-minute or the 80 EMA on the 15. Again, the prices should pretty much coincide very closely. We went sideways here for a little bit, which is concerning because that's time correction. So this 21 EMA is continuing to move lower. And as that catches up through time, there actually becomes a higher and higher potential of getting a further rollover. In some ways, this is beginning to look like a bear flag. But the cool thing about this kind of bearish consolidation, if there was any silver lining, is that all of a sudden at that point in time, the IWM actually started showing relative strength compared to the SPYs and Qs. So I'm like, okay, I like this flip on relative strength. SPYs and Qs are still making new lows. IWM is actually holding in here a little bit. Let's apply some upside pressure on this ADMA. Let's see if we can get above it and see if we can go. Boom, that's what happens. Great. I get a move to the 21 EMA on the 5. Basically, I get my full 15-minute correction at this point. Fantastic place to book more profit. Because now that we got our 15-minute correction here by, let's say, 11:15, everyone should ask themselves, and if you're in the trade or even not in the trade, it's a good exercise, what is now the most likely thing that's going to occur after I got my bounce on the 15-minute correction? Well, I'm in a relatively weak index. It's downtrending on the small time frame. It's breaking down on the big time frame. The most likely thing that's going to occur now is that my trade is going to fail. It's always the most likely thing. Whenever you're doing anything counter trend, the most likely situation is that the trade that you're involved in will fail. It just is a matter of how much of a bounce can I get before the trade actually fails to be able to cover risk and make profit off of that extension, and then the trade fails and you get stopped out of something that actually will make you money at that point because you're able to get such a good correction. And then maybe once in a while, the lower probability thing will occur, which is that your retracement higher actually becomes a reversal higher on the time frame that you're looking at. And in this situation, the lower probability situation occurred. We chopped around here for a little bit, basically made a little bit of a higher low by noon or so, and then we broke up. Once we broke up again, once we got above this high here, this absolute high, which is 190.120, that occurs at 11:30, now something interesting just happened. I have a reversal on the small time frame. So now my counter trend trade, any remaining stock that I have with it, which should be a small percentage of stock, right? Because why should it be a small percentage of stock? Because the trade I was taking was destined to fail. So you're booking a bunch into the ADMA to get your risk covered. You're booking a lot more into the ADMA on the 15 to make sure that you're making profit on it. And then you want to keep, I would say, somewhere, especially on a chart that's with the daily chart being broken. If I was looking at the SPYs or Qs where the daily chart's still intact, maybe I want to have a little bit more of an aggressive game plan. But looking at the daily chart of the IWM that's totally broken and below multiple levels of support, I really shouldn't have more than 10 to 25% of my position left that I'm holding just in case that retracement becomes a reversal, which again it is actually what happened. And then at that point, the next question becomes, okay, well, I just got this retracement, this reversal, I mean, on the small time frame. Is there any chance that we can actually recapture some daily chart levels, recapture some stuff on the daily chart to see what we can do from here, meaning get back above 192? And we're looking really encouraging, honestly. We got this full reversal. We didn't just get above 192. We're holding above 192. I thought we were set for a close above 192. And then we had this quick sell-off into the close that actually still gave us a close below the daily chart level by 6 cents. 6 cents, not necessarily the end of the world, but it is still a technical failure of our levels. So that was that trade there, and I just want everyone to understand it. If you're using the trailing rules, you get out at the 11:50 candle. If you're trailing it super tight on a 5-minute chart, yeah, you're getting pushed out there. And well, so actually, let me clarify that. Not necessarily. Trailing rules are really meant to be for with trend trades. If you raise the stop to this low, you are trailing it, which I get it, and I get trying to lock in your profit, but you're trailing something that you're long counter trend, which that's actually not how my rules are. My rules really are only to trail things that are with trend. So technically, if I was following my trailing rules, the only point in time that I could actually raise my stop is when the trend itself had actually fully reversed. And now I'm actually in the uptrend. The trend on a very small time frame only reverses on this 5-minute time frame. I always refer to it as the very small time frame for whatever reason. Actually, that reversal only occurs at 12:05 here, when you have the next higher low, higher high situation that actually occurs that's showing it up. And then the other thing that I would say about that is I also really don't like trailing on 5-minute charts. Maybe trailing a little bit of your stock on a 5-minute chart, just to make sure that you're locking in profits is fine. But really, if you're trailing things on a 5-minute chart, you are almost guaranteeing that you are that you're going to be getting stopped out. Sorry, just give me 1 second. I see that there's another question coming in, but I need to manage this position here real quick that I'm in. It's moving rapidly. Sorry, just give me 1 quick second. Palantir. Okay. So the follow-up from Brian was, so you're taking off a majority of the trade then and leaving a small runner so that if it does come back to your entry price, you still have money. Yeah. So if it goes all the way to my original stop loss, by the time I get a full correction on a 15-minute chart, there should be no way that I lose money on it. And then, yeah, I'll keep a small percentage of my position. Not even all the time, to be honest. Sometimes I'm taking counter trend trades. I get my, it's more of a scalp type trade. I get my reaction to equilibrium and I'm entirely out of the position. So sometimes the answer is keeping 0%. But most of the time, just the way that I prefer to trade, which is always with a view towards reward maximization, I would actually rather keep a small percentage of the position, and it should be a small percentage of the position because you got to recognize that it is a counter trend trade, just in case that retracement higher actually becomes a reversal, because now if I can actually capture that reversal and then be with the trend, I could potentially get significantly more reward with it. And honestly, a close above 192, which technically didn't happen, will leave you with a nice downside tail here that then all of a sudden actually begins to look like a breakdown failure. Meaning they broke through 192 support, they suckered in a lot of shorts, they stopped out a lot of longs, they managed to close it back above the level, and that actually could sometimes set you up for a much bigger up move. So I was thinking that the right thing to do if anybody was long the IWM from when we called it out was to actually swing the position. With the close above 192, below 192 by 6 cents, maybe you don't want to do that. And for myself, like I said in the VTF, I decided not to keep it just because I've got probably a little bit more long exposure than I want to have on right now. So I'm really not looking to add on any real new long swing exposure. It just became a pretty good looking day trade, and before Palantir hit, it was my best name of the day that wasn't one of the Chinese stocks, and obviously the Chinese stocks trade in a world of their own, and I'm swinging Bob and JD, and they moved up in my favor. So I think that pretty much covers everything from a market perspective and from a trading perspective. I mean, the flip side of it, like I said, I got stopped out at highs of the day in NVIDIA, my NVIDIA short, and I basically got stopped out at the low of the day in my bull long, which is unfortunate. Had a nice position in this thing, bull here. Pre-market, we got this nice move. My stop that I was using was the pre-market low initially, which I think was $12.05. So when it pulled back to 12.11, I wasn't happy, but I actually added back to my position into that down move, and then it ripped all the way back to 12.84. So it was a great move to book a lot of profit into that. Still had more for a bigger move. I wanted to see if I could get a move to like 13.75 today, and then which I actually see in hindsight as a mistake for my rules. I don't think it would have mattered. Ooh, the low's 12.05. Where was my original pre-market stop based off the pre-market action? I need to see. It was 12.05. I would have gotten actually stopped out to the penny had I kept my original stop. So no matter what, I was going to get stopped out. What I was just realizing here is that I raised my stop to the low of the day when the ADMA caught up. You know what? That's not even a mistake. I was going to say that was a mistake because I didn't get a new high, but that's how I trade pretty consistently, pretty often. Is if I'm using a stop that's based on some sort of pre-market action in a name that's in play, like an earnings name or whatever, I will then raise my stop to an intraday pivot once the ADMA catches that, which is exactly what happened here. So I got stopped on the break of this low at like $12.10 or whatever, and then it just gave a 15-minute correction, broke the pre-market low also, and then worked pretty much perfectly. So that was unfortunate to get stopped out of that. I was trying to lean into the NVIDIA short, actually, off of the Goldman upgrade, which, it didn't happen this time, but we've seen Goldman upgrades lead to a sell the move in the stock just so often. And NVIDIA, I don't think actually traded strong today. Most of the move came from the gap up. But I was short some pre-market. I added versus this pivot high, and then I used that basically as my stop. Was able to cover enough into the initial down move and into this down move that I finished basically flat in it. Again, counter trend trade on every time frame, obviously, to be short NVIDIA, where I do get stopped out because my trade fails, but I lose nothing in or even have small positive P&L. That's a win. I'll take that all day, because all I need is every once in a while for this to not get stopped out, and then I get this correction on the daily chart back down to, I don't know, 650, and all of a sudden that becomes a pretty good risk reward in that scenario. So it pretty much covers my day. I think a bunch of you guys were involved in some of those trades as well, so just kind of wanted to go over that. We went over the market itself. So that's it for me on my end. I am happy to answer any questions that anybody has. So let me scroll up a little bit in the VTF to see if I missed anything. I'm also logging into the YouTube at the same time to see what's going on over there. If you're in YouTube, obviously give me that thumbs up. First question I'm seeing here is from Eli in the VTF. How do you adjust your game plan based on the gap ups and downs if there's a particular level that you're looking at to go long or short from? Okay, so how do you adjust your game plan based on how the market is or the stock is gapping up or down? If you've got to basically, if I understand the question correctly, you have like a specific level that you're looking at, maybe for a breakout, to keep it simple. And then today, your stock that you've been looking at to buy this breakout every day, it gaps above that breakout. Let's just use that as an example. So you want to buy the break of resistance for upside momentum, and it gaps above that. So how do you handle that? So there's a few potential factors here, and a few different ways that you can trade it based on those factors. So the first things that you need to know is, why is it gapping past my level? Is there news that's causing it to gap past my level? That's the first thing that you want to know, because if there's news that's causing it to gap past your level, you might end up treating it a little bit differently than if it's just the whole market's gapping up a little bit this morning and my stock is also gapping a little bit past my level. So was there news? Was there earnings? Was there an upgrade? Was there something that's putting it in play? The next thing that I want to know, unfortunately I don't have any examples from today. I feel like this situation happens almost every day. To me at least, happens very regularly, but I don't have any specific examples that we can look at from today. But the next question that you want to ask yourself is, well, how much past my level is it gapping up above? So let's just make, since I don't have an example off the top of my head here that we can actually look at for a chart, let's just make up an example. So let's say that, what your stock has been hovering below $50. It's a big resistance level. You've been wanting to buy $50, and today the whole market's gapping up. There's no real news for your stock, and your stock is gapping up to $50.15. Well, what type of gap is this, right? If you've reviewed my gap class, then you should know that pretty much every gap that exists has a name. The name's honestly not as relevant as the supply and demand dynamics that are created off that specific type of gap. So a gap in which a breakout is occurring because the stock is gapping above the breakout level is referred to as a breakaway gap. Breakaway gaps tend to lead to gap and go situations, right? Whereas most gaps, your average gap, your common gap, gets filled. Breakaway gaps actually tend to give continuation in the direction of the gap. And a breakaway gap is a gap where the stock or your market gaps above resistance or gaps below support. Don't take my word for it. Ask yourself why. Anything that is in technical analysis where you're studying supply and demand, and this is why I love technical analysis, it should follow some logic. So why is it that a breakaway gap would tend to lead to a gap and go when most other gaps actually tend to lead to the opposite? They tend to lead to pullbacks. Well, think about what's occurring in that breakaway gap. Your stock is gapping above a resistance level. What does that mean? Forget about you for a second who really wanted to buy $50. What if you were short versus $50, right? Why would you be short versus $50? Well, it's a resistance level. And your basic rules for support and resistance is to be short below resistance and long above support, right? Those are your basic rules. So maybe you're short this stock versus your $50 resistance, and now today it's gapping up to $50.15. What is happening to you that morning? You're getting squeezed. you're getting squeezed. You had a specific amount that you were planning on risking in this trade, and you're in a bad spot because you are now actually in a situation where you will lose more than you were planning on risking. In this case, by 15 cents because it's gapping up to 50.15. So, what is the most likely thing that the short seller who wanted to be short versus $50 is actually going to do? The most likely thing that person's going to do is cover the short position and realize the loss and move on with his life. So that's buying that's coming into the stock. Now, let's go back to you. You're the person who wanted to buy through $50 and now you can't because it's gapping up above that. And maybe it's the right idea to actually buy above $50. We'll assess that in a second. But let's just assume that you're an undisciplined person for a minute. And oh my God, I really wanted to buy $50. It's above $50. I'm buying. So what happens with the breakaway gap situation when a stock gaps above a resistance level is that the shorts who are already in the market are inclined to get squeezed. People that were flat but wanted to buy are inclined to chase. And, you know, there's probably going to be some profit taking from some people that were already long, but that tends to be outweighed by the new buyers and the short sellers that are getting squeezed. So that's why breakaway gaps tend to lead to gap and go situations. So there is a trade here. It's a breakaway gap trade, and the execution of that trade is a little bit different than just a normal breakout. The breakaway gap trade is basically to buy versus the previous level. The idea being that previous resistance becomes future support, right? That's a basic tenet of technical analysis, and you're looking to take advantage of that short squeeze basically that could come into the market. So in this case, you could buy $50.15 with the stop loss at 50, or I probably would use $49.99 in this case, and look for it to go. And you've got 15 cents worth of risk in a $50 stock. That's not too bad. What if the stock was gapping up to 50.70 though? Is it appropriate to buy 50.70 versus $50 and take on 70 cents worth of risk? That's probably not a good risk reward. Buy 50.70 versus $50. You would need the $50 stock to move to like $52 or whatever to even just make like 2-to-1 on your risk. So that's not going to be a great risk reward to chase a 50.70. So you have to assess just how big that gap is, and then you also want to assess, and that's what I was saying before, is it a news related gap or not? If it's gapping up to 50.15, whether it's news or not news, it almost doesn't matter. You have your breakaway gap trade. If it's gapping up to 50.70, but there's no real news that's behind it, it's just like more market related, and you got to take on 70 cents worth of risk versus $50, and there's no catalyst that could give you outsized reward compared to like a normal move for a $50 stock, it's not a good trade. But if there was a catalyst, if there was earnings or an upgrade or something like that, then it maybe is a good idea to actually buy versus 50.70. The problem is still the risk. So in that case, with a much larger gap, what I want to do is probably find a smaller time frame stop loss. So not the best example in the world, but like just using this bull as an example. Originally, I'm using like a pre-market stop, but pretty quickly, as soon as I can, I want to use an intraday stop loss to actually limit my risk on the trade. So what you might do in the situation I'm talking about where it's gapping up to 50.70 where there's news, and this is probably what I would do, is I would buy a small feeler versus $50. Recognizing that that's probably a pretty bad risk reward. Even if there is news, it's probably not the best risk reward in the world. But you know what? I want to get a feeler position. I really like this thing. I want to have it on my books. So I'll just take a small position size in it, giving it all the way down, with the goal of finding a way to actually get heavier versus a tighter stop loss. How do you get heavier versus a tighter stop loss is going to be entirely based on the small time frame. So like one of the trades that I love is actually something similar to this. So whenever we have really big gaps, whether it's the market like we assessed with the IWM earlier or an individual stock, The first thing that I always really want to see in that first 30 minutes of the day is how is the small time frame extension that's coming from that gap satisfied? Is it satisfied via fast price correction? Is it satisfied because the stock moved sideways for a while and it created a bull flag and the ADMA caught up? Regardless of how that satisfaction of the small time frame occurs, there's a good chance that it gives you like a trade on a 5-minute chart to actually then size up versus. So you get that quick, pull back pivot low into the ADMA on the 5-minute. Bam, there's my pivot. The ADMA caught up. I can add. I can get a lot heavier, and I can raise my stop from my full position to that low. Or I get the bull flag for 30 minutes. ADMA catches up to the base of the bull flag. Maybe the bull flag low is $50.50. I add a lot more at $50.62, but now I raise my stop for the entire position, including that original smaller feeler core, to the bull flag low, and then I'm looking for continuation on the small time frame. So thanks for the question, Eli. I think I covered it. Not a super simple question because there's a lot of different circumstances that can happen, but you want to have rules in place for your trading for any potential circumstance that can happen. And basically, what are the potential circumstances that can happen if a stock is gapping past the entry that you want to have? Well, it could be a small gap or it could be a large gap. It could be a news-based for the individual stock or not news-based for the individual stock. And then you want to, have rules in place for how you trade that specific situation. So, hope that helps, Eli. If you have any follow-up questions, feel free to put them into the VTF. I'll be happy to help. No problem. Popping over to YouTube here. Someone in YouTube is giving me feedback on kissing a gift horse in the mouth. You determine a horse's age by its teeth. So if given a horse as a gift, you don't start to examine its teeth. It's offensive to estimate the value of your gift. You learn something new every day. Appreciate it, Kevin. Also in YouTube from Joy here, do you think that Humana has more downside to go, and is the Microsoft consolidation bullish? Start with Humana. Yeah, Humana looks pretty bad. We had this big gap down here. I don't remember if that was earnings or it was a secondary to a different company, and it retraced to the ADMA on the daily chart, creating a pivot low here. Sorry, pivot high here, or a lower high here. And now you're getting continuation to the downside off of that. Today was just a day one down off of that pivot. This thing looks like lower. Best case scenario, sideways. Lowest probability would be up. Is the Microsoft consolidation bullish? Yes, it is. We mentioned that on Friday as a potential trade in the morning meeting, that if the market could give continuation. I still think that the Microsoft earnings report was very good. Just wasn't enough compared to how much it went up to get a lot of continuation off of it. But you had the initial down move off of it, then you had the inside day, and the inside day broke up. So there was a trade there on Friday, and as it continues to move sideways here and gives another inside day, it's definitely bullish on Microsoft. Gabriel says that shorting NVIDIA, for lack of a better term, was tenacious. I'll use that word instead of the word you wrote into YouTube. Yeah, I mean, it was just super extended. I got that silly Goldman upgrade. I thought I would take a shot, and I even told everybody in the morning meeting, like, call me crazy. But NVIDIA up here with the Goldman upgrade is something I actually want to look at on the short side. Back over to the VTF from Keen here. Which SPY ETF do most of us in here trade when looking to take a position? Probably most of us trade the SPY itself, is the direct answer. For me personally, if I am just going to be like day trading or having a smaller time frame swing trade, I actually prefer the levered ETFs. Not really probably for the reason that you think. I don't prefer them for the leverage. I prefer them for the price. I would rather trade a $60 ETF like TQQQ that I'm in currently, or this UPRO, than trade a $500 ETF. because with the cheaper ETF, I can take much larger position sizes, and when I have larger position sizes, there's a lot more that I can do from a game planning perspective. So that's my preference there. So yeah, UPRO is a common one. Also, I always forget the name of the other one. There's another 3x leverage SPY ETF that's pretty liquid. SPXL. Thanks, Cody. That's $113. So yeah, I probably usually go after UPRO because it's, for the same reason. It's half the price of SPXL. But same, more or less. So appreciate the question. From Joshua, what do you think of Amazon inside close near highs? I think that Amazon and Meta need more time. The inside and up could be just a pure momentum trade if you're a momentum trader tomorrow. But for me, for the way I trade, when you get really big gaps from earnings, in the exact same way that when you have a big gap that creates a lot of 5-minute chart extension, I like to wait and really watch the first 30 minutes and garner information from it. I do very similar on daily charts with big earnings gaps. I don't like trading a day 2 stock that's in the stratosphere. If I have it from day 1, I'll continue to manage it in day 2 if I swung the position. But I don't like to just get involved in day 2, sometimes day 3, sometimes even day 4. I want to see what this thing looks like after the ADMA catches up to price, or price catches up to the ADMA. That's my preference, but it's just a preference. So, an inside and up, even though it's extended here, just as a momentum trade is something you can certainly take. It's just important to recognize the type of trade that you're taking. That's what I always say. If you're taking a momentum trade, recognize I am taking a momentum trade. And everything that comes with that, right? So momentum trades, when you're taking them, means that the trade can fail and your idea might still be right, and then the trade eventually still works without you. I personally struggle with that concept because I trade very much in my head to be right or wrong with my ideas in conjunction with the technicals. So I struggle to be involved in something and get stopped out of it and not know that my idea itself was wrong. You could easily buy the inside day in Amazon tomorrow, get stopped out because it's extended on the daily chart, and then next thing you know, the stock makes a pivot low and is trending higher at $200. I would rather look for more of that pivot low or more of that setup after the ADMA on the daily catches up. But yeah, great question there, Josh, and I appreciate you asking it. All right. Looks like I got through everything in the VTF. Looks like I got through everything in YouTube. Again, guys, these afternoon meetings, this is the opportunity that every trader who is with us has the opportunity to improve by asking questions. So don't be bashful. Doesn't matter what your experience level is. Doesn't matter if you're brand new or you've been doing this for a long time. Ask questions. I'm speaking on Benzinga tomorrow morning. The Benzinga guest at, I think, 8:35. And then we're going to be letting some guests from Benzinga, I think, come into the VTF for the rest of the day or the rest of the week or something like that. So there might be a few new faces in here just for the week after I do Benzinga tomorrow morning. So I think that covers it. Have a great night, everybody. I'll see you all tomorrow.